let's talk more about all of this. For more on the Fed's decision, let's bring in Andrew Levin, Dartmouth College economics professor and former Federal Reserve Board special advisor. And I am delighted to welcome Andrew in the studio. Usually we're talking to you in your office at Dartmouth, so it's really nice to see you in person.
It's really great to be here.
Yeah, so let's talk, first of all, no change. We knew there was going to be no change. What stands out to you from what we've heard thus far?
Well, I think the dot plot will be reassuring to the markets for sure. But let me just point out a couple of things that are important in the statement. The committee has been emphasizing the strong commitment to a 2% inflation target. And in their current outlook, they're expecting it to get very close to 2% over the next year and a half, in which case it makes sense to move policy all the way down, probably below 2.5, 3, somewhere in there. That's the really benign scenario. But they also say in the statement they're attentive to inflation risks. And I think the critical thing here for markets is to understand that there are still risks that inflation is not going to come down so quickly. Let me just give you an anecdote here. So I took Uber from Uptown to your studios a few minutes ago. The Uber driver, who's here in New York City, told me that their salaries starting from January are going to go up from $17 an hour to $26 an hour. Now that's not so different than what we heard from the auto workers union a few weeks ago, from pretty tough negotiations. But the extent to which a lot of workers fell behind the cost of living over the last couple of years, and now the job market's held up pretty well, and those workers want to catch up with the cost of living. Uber's not a charity. So how are they going to cover that big pay increase?
Big increase.
A huge increase. It's great for the Uber drivers. It's great for those of us who use ride-share services because there will be more of them available.
But is it good for us in terms of the prices we're going to pay?
Exactly. And the point is Uber's not a charity, and so they're going to pass that through. And so when we look at what economists call core services, and actually Chair Powell invented the term supercore, which refers to services, say healthcare services. Well, those are going up at 5% and 6% now. Restaurant services, 5-6%. Transportation services like Uber and other kinds of transportation. Health insurance premiums, car insurance premiums are all going up. And so the real question here, I think, for the Fed is, and we'll hear, I'm sure, from Chair Powell about this, is if they're going to be attentive to the risks, they can't just kind of start moving down and be relaxed. They're going to have to really be careful here.
So are you implying, Andrew, then you think that last mile back to that 2% target is going to be tougher than maybe a lot of people expect?
Yeah, and in fact, I wouldn't use the word last mile. I think when we think of a marathon, the last mile is like you're 95% of the way there. The supercore peaked at around 6% on a 12-month basis. Right now it's around 4%, but it's actually been heading up over the last 3 months. That's one of the things that makes me uneasy here. It's not heading in the right direction. Okay, so but still 4% is halfway home, more or less. But it's not the last mile. And so I think that part of the Fed's attentiveness to these inflation risks is going to be looking really closely at these core services over coming months and over the next year or two. Hopefully workers can catch up with the cost of living without spurring another round of inflation.